why real estate agents should consider incorporating or forming an LLC. There's my phone number on the bottom. Feel free to call me anytime after today's session if you have questions on anything that we're going to cover or anything at all related to incorporating. Here's how we're going to proceed through today's presentation. I want to talk to you a little bit about what forming a legal entity means, and then specifically what does it mean to you as a real estate agent. More specifically, what does it mean to you as a Florida licensed real estate agent, because this topic is very, very state specific. Then we're going to talk about how the process works. What is the information the Florida Secretary of State requires to open your corporate entity? What are some of the fees involved? What are some of the ongoing fees after you pay to open it? What do you need to do to maintain it? And then lastly, we're going to talk about the steps that you want to take to ensure you're operating and managing a compliant corporate entity to enjoy all of the benefits that we're going to talk about today. What does it mean? Well, forming a corporate entity is designed to be a separate legal entity that has its own privileges and liabilities distinct or separate from the owners. It can do certain things. It has a legal capacity to enter into agreements or contracts. It can incur and pay debts, sue and be sued. But again, it's going to be held responsible for its actions separate from the owner. So that whole business of separation, you see that word twice on this screen, once it's bolded. That's a real important concept that we're going to talk about today. For those of you that may not be incorporated yet, that don't have a legal entity for your business, chances are very, very probable you're operating as a sole proprietor. Well, what is a sole proprietor? Well, it's what you're doing today. You're an individual, right, because you're individually licensed. You own a business alone, it's your real estate business, and you don't have a separate legal entity. Because you don't have a separate legal entity, you have no legal protection. And the reason for that is because your personal and business assets are combined. Now in real estate, and in other businesses as well, but particularly in real estate, we see this thing called a general partnership, where two or more associates in an office may decide to get together, share expenses, and market to bring in leads, and then they work deals together, and when the deals close, they split them. That would be an example of a general partnership. General partnership is even a little bit more tricky because now, unlike a sole proprietor, not only do you have your personal and your business assets combined under one umbrella, now you have your partner's assets combined under the same umbrella. So it can be a little tricky if you're not structured correctly. So what are your options? Well, your options in this country are actually the same as they are as a licensed Florida realtor. You can be a corporation, and when you incorporate in Florida as a Florida real estate agent, you are considered a professional corporation, and that professional corporation gets a designation of PA. The PA stands for Professional Association. Or you can be a limited liability company. So let's talk a little bit about corporations. There's actually two types I want to talk about. The first one is a C corporation. C corporations are typically your larger corporate entities. They have more than 100 shareholders. A lot of times they have offices in multiple states. They have shareholders. A little bit more complex than what we're going to be talking about today for realtors. The C corporation, the owners of the C corporation, they have that separation that we talked about, and that gives the owners limited liability. So that's the good news. Think of the banks and the economic collapse back in 2008 and 2009. A lot of people wanted the owners of the banks to get prosecuted because they had created all the bad things that happened in our economy, but they never were. And the reason is because they were protected. They had limited liability. It wasn't them personally that was found of doing the wrongdoing. It was the corporations. So as of about a year or so ago, the corporations started paying multi-billion-dollar fines, but not the executives, who, by virtue of all the shares that they owned, are actually owners of the corporation as well. So from a asset protection and a limitation of liability, C corporation is great. The downside of a C corporation is they pay corporate taxes, and they also have double taxation, which means the corporation pays its taxes, and then the individuals who own it also have to pay tax again. So the government sort of knew this was going to be a hindrance to smaller businesses and entrepreneurs and independent associates like real estate professionals from opening new small businesses. And the government, knowing that new small businesses are the backbone of the economy because many times they grow and they hire people and create jobs, they needed a mechanism to make it less penal for small businesses to start corporations. So back in 1958, the S Corporation was born. The S Corporation, the owners of the S Corporation, they enjoy all of the benefits of the owners of a C Corporation in terms of they have limited liability, their assets are separate, but they have another big advantage over the C Corporation, and that is they don't get hit with double taxation. As a matter of fact, they have something called flow-through tax treatment. So what this means is the owners of an S corporation, they have to do a tax return, but when they do their tax return, they submit it to the IRS. The corporate entity itself doesn't owe any taxes. What happens is the income flows through to the owner's tax return, where they deal with it on their personal income tax return. So two benefits to this. Number one, personal tax rate is probably going to be a few points lower than the corporate tax rate. So that's number one. But the big benefit from a tax treatment standpoint is when you pull money over from your S Corp to your personal income tax return, you don't have to take it all salary. The government allows you to break it up into what we call some salary and some distribution or profits, right? So think about this. You own the company and you also work for the company. So the part of you that works for the company gets a salary, but the part of you that owns a company gets to enjoy profits. That's why people start companies, right? To enjoy taking profits out of the company. That portion that you take as profits is exempt from self-employment tax that I'm going to talk about on an upcoming screen, and that's a 15.3% savings right off the top. And I'm going to show you on a couple of slides here in 1 second what that equates to in dollars and cents. So the S Corp was a big, big boon to small businesses starting out. So the other option we have is called a limited liability company. Now, a limited liability company is really sort of a hybrid between what we talked about a moment ago, that sole proprietorship and partnership, and a corporation. It truly is a little bit of a different animal. That's why we say in our heading, incorporate or form an LLC. It really is a different type of corporate entity. But for our purposes, and for the purposes of a Florida realtor, the benefits are the same. You get the same limited liability, and you get to enjoy the same flow-through tax treatment. So those are your options as a Florida realtor. You can be a PA or you can be an LLC. So which is better? Well, as you can see from this screen, they're really more similar than they are different. The only real difference is a PA is a corporation. So if you look at that bottom check mark on the left, a corporation has to have a yearly board meeting and keep minutes of that meeting. But guess what? DBPR says you can have a corporation, but you have to be the sole, one and only individual owner of it forever. So the law states that you have to have a meeting by yourself. So the truth of the matter is, most realtors are doing this anyway when they sit down at the end or the beginning of a year and they do their business plan either with their broker, their team leader, their sales manager, or even by themselves. And really, you just write out your business plan, sign it, date it, put it in the file, and unless you ever get sued or audited, no one's ever going to ask you for it. So it's really not a big compliance issue. Because of that, the trend in Florida is dramatically that realtors choose the PA over the LLC by like 99.5% to 0.5%. And the reasons for it are stated on this slide here. Number one, it's a little less expensive to form a PA in Florida than it is an LLC, and I'll share the fees with you in a little bit here. But I think the real reason why most realtors choose the PA over the LLC is that last bullet point where it says DBPR allows you to change your individual real estate license into your PA, which puts you on par with doctors and lawyers. So what we mean here is there are only 4 other groups of professionals that can put the PA after their name. So in addition to realtors, doctors, and lawyers, only accountants and architects can have the PA after their name. So most realtors choose the PA because it's a little less expensive, but I think the majority choose it because having that PA after their name is perceived to be a little bit more prestigious. It doesn't matter to us. We form them both just as easily. So the decision is yours, but the trend in Florida is by an overwhelming margin, most choose the PA. Benefits that we're going to talk about, we already alluded to 2 of them, personal asset protection and tax savings. We're going to go into a little bit more detail on both of those, and then we're going to touch on additional benefits of adding credibility to your business and reducing your risk of an IRS audit. From an asset protection standpoint, I don't think it's any surprise to anyone on this session that we live in a very litigious society. You see the lawyer billboards all over the place where everybody's trying to get somebody to sue somebody else. And you can get sued regardless of your guilt. Whether you're innocent or guilty, you still have to defend yourself. Now, if you have a corporate entity, a PA or an LLC, it helps protect your personal assets because both of them, the PA and the LLC, allow owners to separate and help protect their personal assets. And how you do this is you actually operate under what we call a corporate veil. A corporate veil is like an imaginary wall between your business and your personal assets, so that if something happens in your business and the business gets sued, the corporate veil makes it very difficult for them to attach your personal assets. If you decide to incorporate with us as part of our compliance package, we have something called a $50,000 corporate veil guarantee. And it works like this, that if you have us do your incorporation for you, we file the paperwork with the Secretary of State. You then follow our step-by-step guidelines. It's actually given to you on a checklist as part of our compliance package. If you ever get sued and you're found personally liable, we provide up to $50,000 in legal defense fees. So that's a pretty good little component of our compliance package. And there are no CPAs or attorneys who provide incorporation services that have anything close to this. So as long as we're talking about compliance, I want to touch on just a couple of other topics with regard to compliance, because this is really part of asset protection and how you keep your personal assets safe and avoid lawsuits. A big part of our compliance package is a registered agent service. And what a registered agent is, first of all, every corporation by law must have a registered agent. And the registered agent has to have a physical presence in the state in which your entity is formed in. Why? Because if a customer or a client has a dispute with your business and wants to sue, they need to be able to serve your entity, which, don't forget, is now separate from you personally, right? We talked about that whole business of separation. And this process is called service of process. So the law says you must designate a registered agent. That registered agent by law is supposed to be at that physical location during business hours. In Florida, it's 9 a.m. Monday through Friday. So if a registered agent isn't available, you could have a judgment filed against your business and lose by default. Now, as part of our compliance package, we become your registered agent. You can, not with the package we're talking about today, but you can be your own registered agent. However, if you get served, you better be there, because don't forget, you're not getting served personally. It's not you, it's your corporate entity. So if somebody decides to sue your corporate entity, it's not like they're suing you personally. They don't have to track you down and serve you. All they have to do is send the process server out to the address of your registered agent. If you're not there, they just go back to the court. They tell the judge that nobody was there at the registered agent address, and you lose by default. The next time you learn about the case is when you get a judgment notice from the court. And as I mentioned, we include registered agent service with your entity. And the last part of our compliance package that I'll talk about later and also in a separate presentation is something called Compliance Watch, which is the archive for all of your corporate documents in the cloud. It includes alerts to your important state filings, things like annual reports, tax return due dates, things of that nature. Provides a comprehensive to-do list that keeps your business activities on track and compliant. The corporate veil checklist that I talked about a moment ago is in there. And the Compliance Watch, it lives in the cloud, so you can access it from anywhere. And again, it's designed to help keep you compliant. We focus on this. You focus on running your real estate business. Okay, we're going to move to the tax portion of it. And one of the reasons why realtors incorporate, probably the biggest reason, is the ability to earn more money without closing any more transactions. And this comes in the way of some tax savings and some tax benefits. So let's say you're working today as a sole proprietor and you close 8 deals, and that throws off a commission to you of $60,000. Well, what we're going to talk about today is how by doing that same level of production, you're able to increase your take-home pay simply by filing a piece of paper at the end of today's presentation or whenever you decide to do it, if you do. But this is the power of it. So let's talk about how this works. We're going to look at a simplified tax example here. We're going to look in the middle column and talk about tax implications of working as a sole proprietor. We picked an arbitrary number that most people could relate to. So we're going to look at a realtor who's grossing $60,000. This is gross income to you after expenses. So maybe you did 85 or 90. You already wrote off your deductions. So you've got $60,000 adjusted gross income. The first thing you need to do when you earn that $60,000, when you do your tax return, is to pay something called self-employment tax. That's comprised of Medicare and Social Security, or FICA, and it is a whopping 15.3% on every dollar you earn. So that's $9,180. You still need to pay your state and federal income tax. Now, we don't have a state income tax in Florida, but the federal is $10,835. And that gives this particular realtor a tax bill of $20,015. So let's look at the right-hand column and say if this realtor was incorporated. Now, remember earlier when I was talking about the benefits of being incorporated, how you're able to pay yourself some money as salary and some as profits. Well, we call those profits distributions. So in this case, we're going to take a conservative approach, and we're going to say that we take 60% of our income as a salary and 40% of our income as a distribution. Now, you'll notice when we look at the self-employment tax, it goes down dramatically. And the reason for that is is because whatever we pay ourselves on that distribution line, so in this case it's $24,000, that amount is exempt from the 15.3% self-employment tax. So that's why it brings that amount down from 9180 to 5508. So pretty substantial. The rest of the equation stays the same, but now when we get to the total taxes due, it's only 16,343 instead of 20,015, or a savings of $3,672. Let's put that dollar amount in perspective for a second. Let's go back to the middle column. Let's say this is a female realtor. Let's say she earned 60 and she paid 20. So that means she came home with $40,000. $40,000 divided by 12 months out of a year comes to $3,333. So look at that number on the right, 3672. It represents more than an entire month of labor that you, if you are not incorporated, you are simply just throwing away and giving to the government. So I want to go a little bit deeper on this. So now most people look at this screen and say, okay, so the larger my distribution, the larger my tax savings, right? So why don't I just take all my money as a distribution, and then I won't owe any money on self-employment tax? Well, the reason for that is you can't, because the IRS says you must pay yourself a reasonable salary. Okay, fair enough. But how much, if you wanted to press it a little bit to save even more money, how much more could you take? Well, the answer is it's not for me to tell you. It's for you to determine with your tax advisor. But I will share with you, there's a very well-credentialed gentleman that I follow, and his name is Sandy Botkin, B-O-T-K-I-N. Sandy was a CPA with Deloitte and Touche, as well as an IRS tax attorney. So he's one of the few people that's a CPA and an attorney. As an IRS tax attorney, he trained the other IRS attorneys on the tax code. So Sandy pretty much knows his stuff. Sandy also wrote a book that I own. It's called Lower Your Taxes Big Time. And in Sandy's book, he dedicates a whole chapter to how you can eliminate 40 to 60% of your self-employment tax by establishing an S corporation. Well, that's exactly what we're talking about doing here today. So in this example, we used 40%, and because Sandy says the sweet spot is 40 to 60, I'm going to show you if we just got a little bit more aggressive and flip-flop those numbers on the top right to take a $36,000 distribution versus a 24, you see our amount of self-employment tax goes down, and then when we get to the bottom right, our total tax savings goes up to $5,508. So now if you compare that to the number on the bottom in the middle, that's like 1.65 months. So that's like 7 weeks of labor that this person didn't have to work just to pay the extra tax bill because he or she did not have a corporate entity. So the amounts are substantial. Let me tie this all together for you. A lot of people hear salary and distribution. It makes them think about a number of things. It doesn't matter because every dollar you earn as commission is fully available to you the minute it hits your bank account. What we're talking about here is when you do your corporate and personal tax returns, you just have to allocate some dollars as salary and some as distribution. So you don't have to cut yourself a check every week or twice a month. You don't have to wait for your distributions once a quarter like public companies pay dividends on shares. You take it as soon as you want it. But the main point here is this is between you and your tax advisor. We are not rendering tax advice by any stretch of the imagination. We're just sharing with you some examples of how it could work. The bottom line takeaway is whatever you pay yourself as a distribution is exempt from the self-employment tax. And remember, the IRS says you must pay yourself a reasonable salary. And that, again, that's between you and your tax advisor. We have found that when realtors incorporate, they find themselves having a fair amount more of disposable income. So the majority of them reinvest this extra disposable income in themselves and in their business. And guess what? All the top brokers in the state, they know this. That's why they have us in so often to present this concept to their realtors. A, the smart ones want their realtors protected, and B, everybody wants their associates to make more money, and C, the byproduct for the broker is most of that money is going to get reinvested in the business, and then the broker is the beneficiary of that as well. As we talked about, they spend it more on advertising and promoting their listings, hiring coaches, hiring personal assistants, getting those extra designations, and going to seminars and conferences because now they have the extra disposable income to do so. So it can really, really help advance your career. What else do you get by having a corporate entity? Did you know that when people see letters after your name, they just believe that you are smarter and better educated? The same thing applies to a PA and even an LLC. And NAR knows this to be the case because they have a lot of designations that you can get. And actually, DBPR considers a PA or an LLC to be a designation. They are letters after your name, after all. And when people see them, it does add additional credibility. It does add another level of confidence that your clientele can have in you. And then what we see is once realtors do incorporate and they do have that PA or LLC after their name, they typically add it to all of their marketing materials. The last benefit we're going to talk about before we get into the process is how by having a corporate entity, it can significantly reduce your risk of getting audited by the IRS. Back in 2011, the Wall Street Journal did an article on how the way most of you are operating today, running as a sole proprietor, itemizing all of your deductions on a Schedule C, that you are 10 times more likely to be audited than your counterparts who have already incorporated and are functioning as an S corporation. And some of the reasons for this were as follows. IRS does an audit on a personal return. They use a staff accountant. They do an audit on a corporate return. They've got to use a CPA. CPAs get paid more at the IRS than do staff accountants. Now, you also may be doing $250,000, $300,000 a year in your residential real estate business or your commercial real estate business here in Florida. And for most of us on the call, that's a lot of money. But guess what? To the IRS tax auditors, a $300,000 business is small potatoes. They'd rather look at some of those other larger C corporations who are dealing in the millions and billions of dollars, because if they find something there, it's going to be a lot more than if they find something on your little S corporation in Florida. As we navigate through this presentation and as we've talked to the tens of thousands of real estate professionals in the state of Florida that we've communicated with after the last couple of years, we have found that it boils down to this being a mindset for success. You look around your offices, those that are producing, those that have been around, they're probably already incorporated because they know this. We see a lot of brokerages now are trying to instill this concept into their new associates because they're looking at having a corporate entity as being an integral part of their business, as important as getting your business cards, getting a website, form a corporate entity, protect yourself, set yourself up for tax savings. You're in business for real, set it up formally, and get on with it, right? We're seeing this a lot. I think our education is making a dent in the state. So you need to ask yourself, Is this something that you want to be? Do you want to be a top producer and create that mindset for success? All right, let's talk about the process. So below you can see there's a place for you to download an order form. I'm going to ask you to go download that now because I'm going to walk you through this form because there are some very, very specific things I want you to be aware of. Whether you decide to incorporate with us or you're going to go to your accountant or attorney, I want you to print out this form and take notes on it because the information on this form is what the Florida Secretary of State needs, and I'm going to tell you some specifics that DBPR imposes upon us as Florida real estate professionals. I'll just sit here for a second, let you get that form. There's about 150,000 realtors in the Florida Realtors Association. The vast majority of them are not incorporated, and we think education is a part of that. Many of you probably came to today's presentation knowing a fair amount of this, but not really understanding a lot of the fine details. So we're helping educate the base on that. But the other reasons are, this can be a costly proposition. It's not uncommon to have attorneys or accountants charge between $400 and $800. And we know this because I have a lot of friends who are realtors who have already done and paid this, not to mention that we have tens of thousands of clients who are accountants and attorneys who charge their clients this amount and then have us do the actual formation at a fraction of that amount. Another reason why that percentage is so low is there is a perceived complexity. Realtors think that there's multiple years of tax returns, multiple months of bank statements. No, we've actually boiled it down to this one-page form. And if you're printing it out online, unless you have a two-sided printer, it comes out as two, but we have it as front and back. So it's a simple one-page form. Let's go through it. The first thing any corporation needs is a name. For Florida Realtors, DBPR makes this very easy for you. You have one choice and one choice only for your name. The name of your corporation will be the name that's on your Florida real estate license. John Doe, PA. If you have a middle name, John Michael Doe, PA or LLC. Simple, case closed. Not John Doe's Homes, not John Doe's Real Estate Services, John Doe, PA. Straightforward. On your form is a little different than what you see on the screen here. I've actually got little cheat sheets for you on the form itself. Now that I told you that's the hard and fast rule, let me give you a little exception to the rule. About 2 years ago, DBPR softened on the middle name requirement. So if you have a middle name that you hate and you don't want to put it on your corporation, you can omit your middle name and go to just your middle initial, or if you have a middle name that you love or a middle initial that you love and it's not on your license today, you can add it. Again, first choice, your name, PA or LLC. If you have a common name, we ask for an alternate. But I will tell you this, I personally have done over 2,000 filings in the last 2 years. I've only had 3 conflicts. The chances are very, very slim that somebody else is going to have your name incorporated. There may be other realtors with your name, but guess what? Only about 10% of them are incorporated. So there's a 90% chance the other person with your name is not incorporated already. Okay? Section 2, what state? Simple. Your state is Florida. Number 3, what type of entity do you want? And again, your form is a little different than what's on the screen. Your choices are PA or LLC. You just have to tell the Secretary of State which one you want. Section 4, when you form an entity in the state, they want to know, what is your business? What are you going to do? For realtors in Florida, the standard answer is to number 4, purpose of your company is real estate services. Real estate services. Now, we do any type of entity, so if if you're on this webinar today for a different reason, you can just put down all business that is lawful is what we usually see. Okay, section 5 and 6 on your form. Section 5 is for LLCs only. Section 6 is for PAs only. If you are forming an LLC, the state wants to know simply who's going to run it and how long do you want to keep it in business. 100% of the ones we formed always check the top box to A and B. One or more of the owners of the LLC will run it. That's you. It's unlikely you're going to go out and hire somebody to run this entity. And section B, everybody wants to keep their business open indefinitely. If you know you're retiring in 2 years and you're never going to use this again, you can plan to dissolve it at a certain date. You would just fill out the bottom box there. Section 6 is for corporations. It deals with the quantity and the value of shares of stock. When you open a corporate entity in the state of Florida, the Secretary of State, by default, is going to want to issue you 1,500 shares of stock at a par value of 0. A par value is the least amount of money a share of stock can sell for. Now, remember, you can't sell these shares to anybody because DBPR says you must be the one and only individual owner of this entity forever. Most just simply check yes and yes to A and B. Authorize my corporation to issue the maximum shares, key part there at the end, without causing additional taxes. You don't want to issue yourself 1,000,000 shares at $5 a share because you will owe additional taxes on it. But most just check yes to A and yes to B. Some people get hung up on a par value of 0. It's irrelevant. You can't sell these anyway, right? So a par value of 0 is fine. Section 7, you must have a physical address. We need your name, your address, it cannot be a P.O. box, your phone number, and your email address. This is information that the Secretary of State requires, as do we, because we're going to communicate with you via email through our formation process, through our compliance process. The state is going to communicate with you via email, so it's important we have all of that information. All right, we're going to talk about the benefits of incorporating with us, and then we're going to share with you the pricing and how you take action today. If you incorporate with us, we handle the corporate name search. We do the electronic filing to the Secretary of State, and then it takes a couple of days, and when the Secretary of State issues your articles of formation, they come back to us. We check them for completeness and accuracy, and then we're going to forward them to you, and I'll talk about that process in a second. That fourth bullet point, we do tens of thousands of formations a year, and we've got a number of partners that want to entice you to maybe become customers of theirs after you become customers of ours. And some of our partners are people like Vistaprint, who will give you 250 free business cards, and then the list goes on. Constant Contact, Microsoft, Google. We have a number of partners that are going to make you offers to kind of tease you to try their service either at a great discount or for free for a period of time, and that comes on your receipt from our company, and you just click on it and you can see all the partner discounts that are there. Now the next 4 bullet points here are all part of our included compliance package that I'm going to talk about. So when your articles are done, they come to us, we check them for accuracy and completeness, and then we forward them to you in this tool called the Compliance Watch Service. And I'm going to do a whole separate presentation on our compliance package because I feel it's at least as important as forming your corporate entity, if not probably more important. The articles come to you in this online tool called Compliance Watch. We also include the exclusive $50,000 corporate veil guarantee that I talked about earlier, registered agent service, and then that last bullet point there, we find that when realtors incorporate with their accountants or their attorneys, they might know how to practice law, they might know how to do a tax return. We know how to keep realtors compliant when they form corporate entities as to what are the things they need to do with the IRS, with DBPR, with their own brokerage, with regard to banking. We've got 5 critical next steps for Florida realtors that we provide our customers, and that is worth its weight in gold because so many people come to our classes that are already incorporated and had no idea what these items were. All right, here's the pricing. No secrets, it's pretty straightforward. We have one service fee, regardless of what type of entity and regardless of what state you want to file in. Our service fee is $99. You see on the top, the state filing fee for a PA is $70. If you follow that down to the bottom, you'll see the state filing fee for an LLC is $125. We do offer a courtesy discount today only to say thank you for attending this presentation. So that brings your $169 for a PA down to $144. It brings your $224 for an LLC down to $199. Simple. All in, $144 for a PA, $199 for an LLC. Now there are 2 more things I want to talk about. Number 1 is right on the screen there to the right in the middle. Once you form with us, I'm going to talk about our compliance package in a second. Once you form with us, you're done between our formation and our compliance. There's no other fees from us. But every year, to keep your corporation active in the state of Florida, they hit you with a tax, and that tax is called an annual report. Not to be confused with your annual meeting. It's a silly name. It's just a tax. It's $150 for a PA. It's $138.75 for an LLC, and it's due May 1st next year. So you don't pay this regardless of what time of year you incorporate. You don't pay this in the year in which you incorporate. You pay it in the following year. Please make sure you pay this by May 1st, and that's part of what our compliance package does. It reminds you so you don't miss this date, because if you miss this date, the state tacks on a $400 late fee, and they don't negotiate it. So $150 turns into $550. Okay, so just like when you buy anything, right? You buy a car, you have to insure it, you have to put gas in it, you have to change the oil. You buy a house, you have to furnish it, you have to turn on the lights, you have to clean the pool. There's a lot of ongoing things you need to do. Same thing with your corporation. So you've formed it now, great. A very important first step to building the foundation of the rest of your career. But you need to be in compliance so you get all the benefits that we've been talking about through today's presentation. So let's talk about the compliance package. Now, we touched on each of these through the presentation, and I am going to include a separate presentation that goes into each of these in detail. But the compliance package includes the compliance watch service, the $50,000 corporate veil guarantee, the registered agent service, and then the 5 critical next steps for Florida realtors. And today, it's been going on for a year, but it might end at any time. We've actually got a banking promotion with Regions Bank that if you open your business checking account with Regions Bank, they'll give you $150. Now, if you look at the little asterisk there are some terms and conditions that I'll share with you. And you don't get that $150 immediately. It takes a couple months to get it. But the bottom line is, if you incorporate today, you get all of this. And if you play your cards right, you get $150 back from Regions Bank. So it makes your formation free. All right, let's talk about the fee for the compliance package. This compliance package we also sell as a standalone offering. It's $179 per year. But as our formation client, we allow you to take that $179 and break it into 12 equal payments of $14.99. So effectively, it's an interest-free loan. So if you have another entity and you like what you learn about the compliance package, you can buy it all day for $179. But in conjunction with our formation package, it's $14.99 a month. And that's all for today's presentation. We're at about the 45-minute mark. I was trying to keep it under this, but I think we did good to jam a lot of information into only 45 minutes. So again, just to rehash, why do people do this? They do it for their protection, to protect themselves and their personal assets, to earn more disposable income without increasing any of their current production numbers, by taking advantage of the tax flexibility and savings. If you don't do it, you're just like the guy in H&R Block says, America, get your billions back, because you're just throwing it away to the IRS every year. You want to establish yourself as a professional by adding additional credibility to your business, reduce your risk of an IRS audit, and by submitting that order form today, you can take advantage of the $25 discount. And again, the discount code is SMD25. Today's fee will be $144 for a PA and $199 for an LLC. Okay, now I'm at the 47-minute mark, so I'm going to leave it there. I thank you all for your time and attention. My phone number was on the screen in the beginning. I will tell it to you again now. It's 954-415-4515. Call me anytime if you have any questions on anything we covered. Thank you again for your attention. I hope to talk to you all very soon.